The next question, what are the main barriers to innovation, the main challenges that are facing fintech companies today, and what can they do to overcome them?
I can start. I guess we've been very fortunate, as you mentioned, to have a really well capitalized business with a great pre-seed. But in many young startups, that isn't the case. Cash is king, and so ability to access funds is going to be really important, and will continue to be important for innovation. And for me, that's number one. And cash through private equity or through any private investment. But what I've found and seen is actually the UK government is reducing their investment, not increasing their investment in like R&D tax credits. So the rules have changed significantly in that what used to be, we could claim back X%, that's probably going to be a third less now. And so the ability to generate or to invest in R&D that government backed actually is reducing now. There are alternatives. You can apply through like the UK Innovate, which is another opportunity, but it's really slow. And like when you apply for a UK Innovate grant, if I was to apply today, I wouldn't probably see a penny of that till maybe October, November, even December. And again, as a young business where cash is important, cash flow is really key. And so again, cash is by far the most important thing for any young fintech. The other one for me as well, before we move on, is regulatory compliance environment. We work in a regulated environment. And often being in a position to even apply for a license to do something, whether it's e-money or credit or whatever you call it, often the regulator needs you to be a fully functioning business, which is fully staffed with an MLRO and everything before you can even apply. And that's when the clock starts ticking. Before then, you actually get licensed, which could be 12 months later. That period is a very difficult period for any young fintech, because like what you're doing that during that period of 12 months of lag, because your burn rate's really high because you need to be in that kind of ready position to apply. But then the FCA often aren't that quick at issuing licenses for the right way. I mean, they've got to invest the right governance in how they make sure that they're giving the licenses to the businesses that've got the right level of control and consideration. But again, that timing is difficult, I think.
Yeah, I would add to that. I think just touching briefly on Carl's point about the financing and the funding. I mean, obviously, Fund Onion, we're kind of we're specialists really more on the debt finance side of things. Now, I'll speak very openly in terms of like fintech, non-fintech. Most of the customers or the clients we work with, they're not really going to be fintech businesses. Well, no, sorry, I misspeak. They may well be, but in order to access the kind of debt financing that the private credit markets can offer, you need to have a fully functioning business, cash flow, turnover, ideally a healthy profitability, solvent balance sheet. Obviously, if you're a fintech business, it might be a few laptops and then you're trying to have a basic value on the IP or the goodwill of the business, which is really difficult for a lender to underwrite on. So I completely agree with Carl in terms of that really innovative, young stage, like day one, right out the door, pre-revenue business, which are in many ways they can be the kind of entities that become, the next, kind of, Starling Bank or the next Revolut or whatever it might be. The government, we in the UK, should be looking to foster a sense of innovation and entrepreneurship, and the government should definitely not be rolling back the ability for investors, whether or not it be like high net worth or self-cert investors, to meet certain thresholds, or in terms of private investments, which they've currently, I think they've changed the rules, so they're about to. And then also with things like R&D tax credits, because that will have an impact. Because at the end of the day, as buoyant and frothy as the private credit markets are right now, and they are, those lenders are not going to be in space really to support pre-revenue businesses with a very high burn rate. Then going with Carl's second point, it is a bit of a chicken and egg. I can understand why the regulator might want there to be the functioning system in place for when the license is issued, but at the same time, the economics of running a startup may not accommodate that. At the end of the day, then you can have very, very good business ideas and good teams fall by the wayside, and then they end up at larger incumbents, and you don't see that kind of innovation in the economy anymore. So I think it's really important for the government and the regulator to have a kind of business first entrepreneurial mindset. And if they want to grow, the UK and the country into kind of a leading pioneer in fintech, which is what the the Conservative government have mentioned on numerous occasions over the past couple of years, and also I think the Labour government are thinking about at the same time, depending on election later this year. They need to make sure that they have that kind of mindset, and also understand that if you're dealing with a very small nascent business coming into place, they're looking to get a license to operate. They're going to have a very minimal impact given the size of what they are, and obviously maybe it's more of a question of easing them in and then allow and grow and build the regulatory framework around them. Obviously, look to protect consumers, but at the same time, have some perspective in terms of what's actually happening. If you're going to be issuing a license to this business, they may only have a couple of hundred consumers at the beginning. It's not like you're issuing a license to, JP Morgan and they've got 20, 50,000 straight away. I can understand that, but as well have a bit of perspective about the impact.
Yeah, as I was saying, I think the only extra thing I've got to add on there is a sort of the flip side of the funding coin is to sort of enable new companies to use whichever funds they actually manage to get access to in as efficient way as possible. Quite often building a new application, even just up to MVP level that you would then use to then go out further to the market and get more funding, can take up a huge proportion of whatever seed or sweat capital you've put in yourself. And certainly one area we want to sort of be working in is to find ways of making the most efficient use of whatever initial capital young startups have, to be able to get them over that threshold of a proof of concept or a minimum viable, so that then the broader market takes them more into, takes more of an interest in them, and then they have access then to the VCs with the larger pockets that I'm sure we've all had numerous conversations with over the last couple of years, trying to sort of flirt with them as best we can.
Alex, I wanted to also ask you, we mentioned on the open banking side of things, excuse me, a kind of education or awareness piece with the general consumer out there with regards to open banking. Are you experiencing anything similar with regards to the awareness and readiness to accept low code, no code types of solutions with the type of company that you're targeting?
Certainly, there's been a high degree of sort of skepticism, where people not feeling like they want to be number one to sort of say, let's go with this. But what we did find is as soon as the first person said, I want to be number one, everybody else wanted to be number two. So, with it being sort of, a new thing to be used in this particular environment. I mean, you guys talked earlier on about sort of the Shopifys and the Wix of the world, basically enabled anybody who's got a great idea to build a website. Very much that's the sort of thing that we're coming over that same wave again, in sort of a slight paradigm shift in the market that says, no, actually you don't have to be a full team of front end, back end and database engineers to be able to build sort of applications like this. And so, yeah, that is a big part of our sort of, sort of educational process as we're talking to potential clients.
Cool. Thanks for that. The final thing that I wanted to ask, is there anything that we should be speaking about that we haven't touched on in this conversation in the form of other innovations or the trends that you're particularly excited about relevant to the fintech space?
So I certainly think after a bit of a bumpy start, things like sort of NFTs and cryptos and sort of digital coins or digital assets has been sort of something that's maybe sort of had a bit of a sort of a rougher start than it hoped it would, that sort of industry. But there are sort of adjacent areas of that are definitely worth sort of looking at, the sort of the digitization of physical assets. So where multiple people can buy into the ownership of a Van Gogh painting or something like that, because it's turned into a digital asset that then could be sort of split up and shared and part purchased here and there, is a sort of a core part of the sort of digital currency sort of evolution. And yes, there have been some sort of some bad players and some unfortunate sort of occurrences that have probably soured the confidence in that sort of area. But I certainly think the sort of digital assets and digital coins and that kind of area is definitely a place worth keeping an eye on.
Yeah, I would second that. I mean, in addition potentially to digital assets, but I think blockchain, which is often, I think, maybe a little bit overshadowed by like the crypto space, but I think the blockchain technology with addendum only ledger to the ownership of assets. Now, how that's going to work, it's one of those things where you say, yeah, in theory, sounds like a great idea, but then it's really the practicalities of it. You know, things might be, to give a really practical example that I think probably a lot of people might understand, and we see sometimes as well, is you know, like land registry completion. Now, if there was a quicker way, often if you purchase a property in the UK, it may take you 4, 5, 6 months to be updated to the land register. And there can often be questions about the title deeds and all this kind of stuff. If we could find a way to, I think there is a really good opportunity for blockchain potentially to be a solution to registrar databases going forward. I think that's you know, potentially one use case of like a really interesting addendum only public ledger. But in addition to that, I was thinking, you know, one other thing is kind of the Internet of Things. I think Internet of Things is really interesting innovation that consumers can use more of, and I think there's quite a good opportunity to connect the fintech space to the Internet of Things, because ultimately, if it's Internet of Things, if it's something in your house, you know, say it's like, you know, smart devices in your home, that might be linked to your gas and electricity expenditure, and ultimately it's expenditure, therefore it's finance, therefore it's an opportunity for financial services tech to make an impact. And again, we can link through things through, you know, say open banking payments or analysis. So I think the Internet of Things, I don't hear people talking about it a lot so much like the past 18 months, but I think it's a really interesting space that we could help consumers use their goods, finance their goods, and monitor them more effectively.
Yeah, that's what I was going to say. Well, the prerequisite to that is 5G adoption, as in we're very lucky in London and other places to have high-speed 5G internet, but that's not the case across all the consumer base. And I think the next 12 months is going to be instrumental around adoption of high-speed 5G internet across the majority of the UK, and that will allow us to do things like Internet of Things. I mean, we provide a mobile service. We take for granted that people can touch anywhere in the UK, but they can't pay with open banking anywhere in the UK unless they're connected to a good mobile service, whether it's at home or on 5G. And so that will be a big ability for us to adopt things like AI, machine learning, open banking, because again, it's a lot more accessible to many more people.
Brilliant. Well, guys, I really appreciate all of your time and insight on those questions. You know, it's been a great conversation.